This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. And we saw the cattle market get a little bit of a break yesterday, which I think was very healthy. We're seeing buyers step back in and rebound the market a little bit, but I'm not so sure that the bottom is just in yet. I think that the market would welcome another pullback. And we got to some big technical levels as well, looking at some of the deferred contracts. February, that's going to be where a majority of the volume is now, got pretty close to contract highs, 126.30. So we're potentially staring down a potential double top up there. If the bulls can't break out above that pocket, I think the bears have a little bit of an advantage here in a still overbought market. If we do start to see sellers step in, the next support level that you're going to keep a close eye on, technically significant as well as psychologically significant, is 120. We've started to see the cash market develop a little bit here over the past couple of days. 115 in the south yesterday, hearing reports of 116 in western Nebraska. So if we start to see cash stabilize or even soften up here over the next couple of weeks, I think that really puts the pressure on the market and could encourage some long liquidation from the funds. Now, as far as the feeder cattle are concerned, obviously they took the brunt of the pressure yesterday, broke down technical support. There was trend line resistance from the contract lows down at 126 in that January feeder cattle contract. Previous support now becomes resistance. If the bulls cannot chew through and close back above 145, I wouldn't be surprised to see a little bit more pressure, but ultimately feeder cattle probably come into a little bit more of a range here in the very near term. Wrapping things up with the lean hog market, we're looking at February. That's going to be where the volume is going to start to pick up at. 76 is where we failed at earlier in the week. This represents the 200-day moving average. If we are able to get out above here, maybe potentially tomorrow get some good exports, we could see the market continue to run. It is a little bit more constructive than the front month December futures, but still keeping an eye on the technicals. Support 71 to 72 is the low end of the range. We think that is kind of the buy area if you want to be long the market. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.